Hello everybody, welcome to today's video. So as you may know, I've been doing some thinking about my portfolio, and one of the big moves that I've been doing was selling Palantir to buy Enphase. And I still have about half of my Palantir position, and the rest of it may get sold if Palantir keeps going up. Obviously, Palantir is going up because of the war and the Gotham software, in my view, not because of a Foundry software. But anyways, topic for another video. But I think this stock is expensive, and a few other stocks that I have are getting expensive, which means that I have to look at the best opportunities that I see in the market right now. And to me, the best opportunities that I see in the market right now, as reflected in my portfolio, are Tesla, Enphase, and Bitcoin. And of course, we're going to have some volatility coming. We have volatility tonight on Tesla, right? After market close, we have earnings. Then on October 25th, after market close, we have Enphase's earnings, and we'll have some volatility related to that. And Bitcoin will see great volatility whenever there is news of ETFs, or whenever there is a wave of ETFs that get approved for Bitcoin. And I believe the approval is imminent or impending, as we saw a piece of news 2 days ago that made the price of Bitcoin goes up. And the big question is, are many ETFs going to be approved at once, or is it going to be multiple over the course of multiple weeks? And so every time a new ETF gets approved, are you going to have volatility? What I'm trying to say is that I believe there's going to be opportunities on these stocks, and the topic of the video is this the last chance to buy these stocks for these cheap? And of course, I don't know. That's the answer to the question. I don't know. But my approach to this is very simple. These three assets, frankly, I love equally, and it'd be hard for me to pick one. I mean, I suppose I would pick Tesla over Enphase, still, despite the valuation of Tesla being much higher than that of Enphase. But then between Tesla and Bitcoin, I would have a very hard time picking my favorite. If you look at the position, again, it's Tesla number 1, Bitcoin number 2, Enphase number 3. If you just look at stocks, then Enphase is number 2 for me. But this ranking in the top 3 is more random than anything. It's different asset appreciation that have made some positions earn the number 1 position, the number 2 and number 3 position, and it's all based on movements, right? In fact, if Bitcoin were to double, Bitcoin would be my number 1 position. So my approach to the volatility that is upcoming over the coming weeks is let the deal come to you. And that's what I'm going to do. I'm going to let the deal come to me. And I will direct my buy towards the best deal. So, if Tesla loses 10% tonight after market, I'm buying Tesla tomorrow. If it goes up, I'm not buying Tesla. But if on October 25th, it's Enphase that loses 10%, I'm going to be buying Enphase, and I'm going to be waiting for the opportunity. And the same is true for Bitcoin, because at this point, I believe these assets are major assets with major inertia, with a lot of fundamental reasons as to why they would go up. And I've gone over these reasons many times on the channel. So I want to keep it general, and I want to keep it on the market and on the opportunity. And especially 2023. Why do I believe late 2023 is really perhaps one of the last opportunities that we have to get these wonderful assets for cheap? And why is that? Well, we have a few things going on. First of all, interest rates. It seems clear now that there's not going to be another hike. If you look at the CME FedWatch tool, November we're saying 86%, we stay the same. December again 61% now, we stay the same, but that's steadily increasing. And then the odds that we stay the same keep going on until May, and after May we may see the first drops. I believe this will come sooner. I've been proven wrong many times, but at some point, these rate drops will come sooner than we think, because obviously the longer we go, the more people are going to say, oh, it's 6 months from now, it's 6 months from now. It's always 6 months from now, and it can't always be 6 months from now, right? So at some point, there will be one surprise. I definitely thought that the rates would drop much faster than they have, so keep that in mind. But I just want to point out another reason why I think the rates are going to be decreased is because, and I've said that multiple times on the channel, monetary printing is clearly accelerating. I remember when the IRA Act was passed. When the IRA Act was passed, which by the way was predicted to cost between 180 to 200 billion a year, right? When that act was passed, everybody was saying, this is the last time. This is the last act that they do. This is the last thing that they do, right? And this is news from yesterday evening. What do we learn yesterday evening? Biden is considering a $100 billion funding request for different war expenses and other sorts of expenses. You know, the irony of this is if you follow the Middle East situation, Israel asks for 10. They asked for 10, and the bill is for 100 billion, right? Never let a crisis go to waste, as Churchill was saying. You know, they ask for 10, go for 100, right? Why not 200? Why not 300 while we're at it, right? A casual 100 million. Who am I kidding? $100 billion, just like that. Like, how much more are we going to see? You know, it's the same as the student loan cancellation program, right? So the student loan cancellation was canceled, so that was supposed to cost 400 billion. But if you add up all of the measures that were put in place for student loans, and if you watch the news every week, you see 7 billion canceled there, 500 billion canceled there, 500 million canceled in another place. If you add up all of the small, tiny cancellations, actually, the plans, the executive orders on student loans are $200 billion. 200. So we went from 400 to 200. That's still a major amount of money. The only constant, and this is why I've named the channel Beat the Denominator, the only constant is that money will be printed. There will always be more reasons to print, and these reasons will always seem legitimate and be made to be legitimate, whether it is the student loans that can't be repaid, whether it is the environment and the IRA bill, or whether it is international security. So, how many trillions will be issued in 2024? Will it be 3 trillion? Because I've been saying 2 trillion for about a year now. 6 months to a year. So will it be 3 trillion of new debt? I'm not talking refinancing here. I'm talking new debt. Well, you know, QE will have to resume. QE will resume. There's not enough demand for these fresh new bonds. QE will have to resume, in my view, and it will resume because the government does not want to stop spending. We always go back to the initial point of the government doesn't want to stop spending. The crisis of the 1930s that we went through in the 1930s, well, I mean, most of us weren't born, but the crisis that was decided in the 1930s, governments don't want to go through it again. So we're never going to get a deleveraging. They're going to kill the currency. And that's it. That's all. That's what I believe. Okay, sorry, I get fired up when I talked about that stuff. But let me move on to another point of positivity, which I think why the markets are going up. The election year. Did you know that election years tend to be very good for stocks, and they tend to be up years for stocks? This is from First Trust. This goes through all of the elections since the early 1900s. If you want to look this up and download it, you can see that on average, election years mean an 11% return in the S&P 500, 15% if a Republican is elected, 7% if a Democrat is elected. So positive returns, you know, that's good for us because so many of these stocks, in my view, are way undervalued. Like Enphase, I can't understand how Enphase is this cheap. Tesla too, I think Tesla is undervalued as well. So if we have a great positive market here with the election, as it usually is, that's also a sign for me that we may be in one of the last opportunities that we have to actually buy stocks. And also noteworthy to say that of course a Republican, if a Republican is elected, it seems like the market is showing more than twice higher returns. So return is about twice as high as if a Republican is elected. And actually, you know, of course, we're too early to say anything. It's too early to say anything. But CNBC today, on the front page of CNBC today, you know, Biden would lose in matchup against Trump, according to a survey of more than 1,000 people that they asked who would you vote for. So Again, these methodologies, you have to be careful, but Trump is obviously a Republican, so are we going to be in a 15% S&P 500 return year in 2024? In which case, that means the Nasdaq would be 20-ish%, maybe more than 20%. Of course, the other important point that I think the market is slowly pricing in, or at least the gambling. If you look at the gambling odds, there's very, very high odds that actually Kennedy would run as an independent. He's actually announced that he's going to run as an independent. Is he going to go through with it or not? It's a different question. But Kennedy, of course, the Kennedy family, Kennedy is a democratic family. They're Democrats, right? And since they're Democrats, of course, they would likely take votes away from the current incumbent Joe Biden, and so that could actually greatly benefit the Republicans if that were to happen. So I mean, I just think this article was well named. Like, could Kennedy spoil the party? As far as we're concerned on this channel, we're concerned about returns, and for the returns, election years are great, which is why I'm positive. I'm positive, and I want to buy stocks, and I want to take positions in stocks, possibly before the beginning of a great year for the S&P 500, as it has historically been. So. Another thing that I think I'm looking at right now, and the reason why I'm doing this, I typically don't cover options. I don't do many options, but the only reason why I'm covering this is if you saw my open door video, you know that I'm listing a house and I'm selling a house, and so I don't know when I'll sell it, but likely early 2024. I'm not willing to sell it for cheap, so I have a house proceeds coming up. And my whole idea is that, in general, options, very expensive, very expensive leverage. I think there's a lot to be said that options in many cases are more expensive than margin. But in the case of call options, there's a specific use case for call option, which is, what if you have cash coming in 1 year, 1 year and a half, 2 years, and you want to take advantage, or you want to lock in the prices today. That's the way I look at options. I want to lock in the prices today. And right now, I find this pretty interesting. So in the case of a Tesla, and again, options are expensive. Keep that in mind. Options are expensive. But if you buy a 245 strike price, so $245 on September 20th. So if you bought that Tesla option, for example, you could buy Tesla stock on September 20 of 2024, so about 11 months from now, for $245 per share. Of course, it's a contract for 100 shares, so it would cost you $5,487. So that means you would be essentially locking in a price of $299 all in, right? If you include your premium, your option premium, $299 all in per share for September 2024, right? Expensive, more expensive than it is today. But the question is, can Tesla double in 11 months, right? If it doubles in 11 months, when you would have outstanding return with these options. And I consider Tesla shares to be highly undervalued. So again, what if the shares in 2024 would trade at 500, and you have the option to buy the share at 245? Right, so the upside is high, and the risk is yes, you're risking $5,500 is what you're risking. Sucks. It's a decent 1 week vacation, right? It sucks, but that's okay. And the same is true for Enphase, and for Enphase actually, I would look at a longer horizon, because. I find the options pretty cheap in a longer horizon, and I suppose Enphase, there's a little more uncertainty in my view over the next year than, say, a Tesla, because Tesla, the cars are killing it. There's a lot of catalysts coming for the cars. Fewer catalysts are coming for Enphase. But if you look at leaps for Enphase, so expiring in January 2026 right now, the leaps for Enphase is $5,300. You would pay for 100 shares to buy, for the right to buy 100 shares at $120. And that would lock in an all-in price in January 2026, an all-in price of $173 a share. keep in mind, I think $173 a share is dirt cheap for Enphase. So buying it at 120 is a dream come true, especially in 2026. So in my view, always careful with call options. I'm always careful with that. It's leverage. You don't own the shares. You own an option. But I think it's ideal if you intend to take possession of the shares. This is especially true for me because I would have proceeds from the house that I'm selling, and I would want to take possession for the shares, and that way you can delay tax and you don't have to pay your capital gains tax right away. You can pay your capital gains tax, 30 years from now, which is kind of what I like to do. I like to hold my investments for a very long time and let the investments compound without having to pay the tax, right? So you pay your taxes the latest that you can, right? Hold investment for a longer, and tax is important when you invest. And the last point that I have to make is, of course, Bitcoin. And Bitcoin, so right now the price of Bitcoin is slightly going down because we've had this rumor and the rumor was gone. But this gave you an idea of what happens when the ETF gets approved, right? The stock shot up to $30,000 in very little time, in very little time, and so when that actually happens, I believe Bitcoin will soar, and Bitcoin is kind of my placeholder. If I don't get a deal on Tesla, if I don't get a deal on Enphase, I will likely put some money into Bitcoin, right? If I don't get a deal on either of those. But I'm obviously very bullish on Bitcoin, and I've covered Bitcoin multiple times on the channel too, so feel free to go back and look at these videos if you're interested in learning more. Anyways, none of this was in my investment advice. No investment advice, just entertainment. I appreciate your likes. I appreciate your subscribes. Thank you so much for watching, and have a wonderful day.